Hello, good morning. Today is Thursday, the 30th of January. The big event of the week occurs today at lunchtime with the Bank of England rate decision. And there'll also be a press conference with Governor Carney. And sometimes it's not the decision itself, but it's the comments and the statements around this that can actually have the biggest market impact. So why this is potentially such a key event and why I expect we'll have high volatility in the pound around it is we're not far off what you call coin flip probabilities. So according to market pricing, there's currently a 45% chance that we get a rate cut. So obviously 55% chance we stay on hold. And when you're around these sort of levels, either way, you'll get some sort of movement, whether we stay on hold or whether there is actually a rate cut. Now, a consensus forecast taken amongst economists is that we will stay on hold. They think 6 people of the 9-person committee will vote to keep rates unchanged with 3 dissenters. The last 2 meetings we've had 2 dissenters and 7 staying on hold. So this is something to watch here quite closely. Obviously you need a majority to decide on the future interest rates. So if you get 5, then you can obviously see it swing to the other way. So if we were to get, say, 4 dissenters, then that could be seen as quite dovish and that possibly a rate cut will be coming going forward, and that would be negative for the pound. In terms of this as well, it's very important to look not just at rates, as I said at the start, but also what the future path is for monetary policy. If they do cut rates, but then basically suggest it's a kind of one and done, and there's no more rates that will come for the foreseeable future, then we could actually see a positive reaction in the pound. So just tread carefully over this, and as always, try and discern and take in as much information as possible before committing to a position. And as always, use stop losses and don't fight the price action. If the market is tanking one way, then don't try and stay in front of it and hold on to a position and think you're right and the market's wrong. Now, technically speaking, pound US dollar is at a very interesting level coming into this. I talked about this chart the other day. We have a confluence of factors why this area around 129.50, give or take, is potentially key support. Have this rising trend line going back from November, the bottom of the Ichimoku cloud, which we are just poking below, and also the kind of swing lows, which previously offered some resistance, more recently have provided some support. Now, as you can see by the structure and the way the cloud is forming, we need quite a positive reaction quite soon to actually prevent us from going under the cloud. And it's not really until we get firmly back above this 130, 175 level that you'd be confident that this pullback has kind of run its course. You can see we have a kind of falling trend line from these highs as well, which is kind of still in play. Also worth noting though, the lagging line for the cloud is still some way behind, so it would take a significant drop for this break lower to be confirmed. So whilst this is potentially key level 129.50, I'm not sure it's the nicest pound pair to approach this decision with. So I think slightly nicer, if we do get a dovish message and we get weakness in the pound, would be a short pound Swiss franc, GBPCHF. You can see similar situation, but we are a little bit further ahead, if you will. We've broken down below the cloud already. These 2 lines have both confirmed this break, and the lagging line itself doesn't need to fall too far to confirm a break lower. Or if you flip it and look the other way, what would this need to be confirm an uptrend? It actually takes quite a significant rally and quite a lot technically to happen to get back above that cloud. We have a shorter term rising trend line, a series of high lows recently, but if we do dip below that, could swiftly go down to around 125.30, and that's not really too big a level. That's just the low from January here, so we could actually see significant declines if we get something dovish and a negative reaction in the pound. Euro pound is another pair. It's often overlooked. It's seen as not too volatile, but it's an interesting level. I don't think it's too nice to trade today, to be honest, because whilst we're in the cloud, possibly this downtrend that we've seen going back to August could be turning and changing. Obviously, pound weakness here would mean higher move in EURGBP. But again, the shape of the cloud, where the lagging line is, and also this fairly strong resistance around 0.86 are all reasons why I think this isn't a great point to get involved in this market. I'd rather see how this develops, and if we do get sustained weakness in the pound, then possibly in the days and weeks to come can look to getting long here. But for now, we're really in this range from 0.8277 to 0.86, so just over a 320 pip range, and we're pretty much bang in the middle of that. Often The most volatile GBP pair over these sort of events is GBPJPY. You can see similar again, we're in the clouds. So you can see in all of these we are possibly coming to a point where the prevailing trend, which has been in place since let's say September, October, is possibly changing, but we're yet to have that confirmation. Now this looks quite nice around 140.75 for me. If we can get down below here, I think there is scope for further downside. But one thing to keep in mind with this is it's not just the pound, obviously, that impacts this cross. It's also the Japanese yen. And the Japanese yen is often sensitive to what's happening in other risk assets, i.e. equities. And as you've seen, we've had that drop in equities of late in the past few days due to these coronavirus fears. And what that means is that potentially you could see other things impacting this than purely just the pound. So those are the four I'll be watching over this. My preference really would be for shorts pound Swiss franc if we get dovish reaction, or long pound US dollar if we do get some positivity, something hawkish, and something either saying that a rate cut's unlikely going forward, or even if there is a rate cut, they don't see a sustained path of rate cuts going forward. Then I think pound US dollar could be quite a nice place to get long and look for significant upside with those stops below 129.50 around here. Okay, thanks for listening and best of luck if you're trading over this decision today.